The GBPUSD strategy that I'm about to show you will completely help you pass your prop firm account. Okay, it will help you pass your expert elite funded, and this is a kill zone strategy that doesn't work every day, but when it works, it really makes a lot of profits. I'm going to show you exactly how to actually trade this within the live markets, so make sure you do this in very carefully, because this video has so much value to give you. Okay, so we're going to start off straight away. We need to mark out the highs and the lows of Asian session, okay? And we need to identify which part of price actually gets liquidated first. It's going to be on the 5-minute time frame, and I'm going to be using the London zone, right? So what I'm going to be doing is marking out the highest point of Asian session and marking out the lowest point of Asian session, as you can see right here. And after I've done that, what I need to do from here on out becomes very crucial, because if you get this point wrong, then you're going to get the whole strategy wrong. So make sure you listen very carefully. You need to play price forward until you see a sweepage of liquidity, whether it's the highs or whether it's the lows, right? So if I play price forward now, you can see that it's completely swept the highs, okay? So once it's actually done now, what I need to do is mark this out as my market or my liquidity sweep right here. I mark this out as my liquidity sweep, right? So once that's completed, what we need to do is move on to the next step. We need to find a breakage of structure where fractional highs / fractional lows have completely been swept, and then we can reinforce our market structure shift with an engulfing candlestick if it's possible, right? So what I need to do now is play price forward until I get a market structure shift which also has an engulfing candlestick, okay? And that will be the perfect entry for me. And as you can see right there, we just got two big momentum candles which are going towards the downside, and this is the perfect indication for me, right? So I'm going to be doing, let me play price forward one more time. As you can see there, we just got our market structure shift right here. So it's from here to here. So I'm going to be counting the second market structure shift, and once we actually do get this market structure shift, what we need to do from here on out becomes very easy and very simple, because we can completely finish the trade, right? All we've got to do is identify a fair value gap, and then we can overlap the fair value gap with the market structure shift for a higher probability. And after that, all we have to do is execute the trade, and then we're in and we're ready to actually take our profits, right? So all we need to do now is actually mark out our fair value gap, which will be from this point to this point, because we will not go for the extreme FVG, because this strategy works only with the closest FVG, right? So what I'm going to be doing, marking this out as my fair value gap. And also there is another thing, right? As you can see right here, we marked this out as our fractional low, and let me tell you why exactly we marked this out as our fractional low, because price actually moves in very complex ways, and once it actually moves in a 3-candle pattern, which is like this, you can easily tell which one is the fractional low, right? It's the lowest one right here. But what if price did a movement like this, right? If it did a movement like this or a movement like this right here, then this would not be the fractional low anymore, and it will be the lowest candle, which is why we only mark out a fractional low at the lowest candle, right? So if I move this all the way over here, you can see that it really matches up with this candle pattern, and it does actually follow it, right? Which is why we use that. But anyway, we just used the market structure shift, and we did also use our fair value gap. Let me just bring this back right here. So that's the market structure shift, and this is the fair value gap. All we need to do from here on out is actually short position this, because we do trade the reversal. Short position, leaving the stop loss where it is, and I'm going to be placing my take profit at a 1 to 3.9 risk to reward ratio, okay? All I've got to do from here on out is actually play price forward, and you're going to see exactly how it runs up and completely smashes take profit. But for any of you guys who actually have a 9 to 5 or have a full-time job or don't have time trading, listen, I've got a perfect opportunity for you, because Nicholas just made $13,000 with our service without doing anything. Okay, he just went to his job, came back, and then he woke up to a $13,000 payout, and that's because MSPass was running his account in the background, right? This is what we do. We help you cover 25% of your account cost. We pass your account in 5 days, and then we manage your account, getting you a payout in 21 days. You keep 70% of the profits, and we keep 30% of the profits. So you do not have to pay anything up front. There's only 5 spaces left for this service right here, because we only take on 5 clients a month. So make sure you join the first link in the description if you do actually want to join us. But anyway, what I'm going to be doing now is just playing price forward. Let me just move this over, and you're going to see exactly how it does enter right here. It just entered right there, nearly hitting stop loss, but it didn't, and it's entered, and I was going towards the downside, completely going down, right? And as soon as it's going down, you can see it's really going close to the take profit, and as you can see right there, it's completely smashed our take profit, which we wanted to see, right? That's very amazing what we're seeing from price right here, because it is actually running up how we want it to, right? I'm going to show you on the actual example right here on a fundamental level how the strategy actually works and how you can use this to your advantage. You're going to wait for price to do whatever it wants, right, on Asian session, and I do have the indicator right here. which is making this area blue, by the way. And if you want this indicator, just comment down below and I'll give it straight to you, right? But anyway, once it actually gives a specific trading time, all we need to do is mark out price from the highs and the lows, right? So it's the highest point of Asian session and this is the lowest point of Asian session, right? And as soon as we do this, what we need to do is wait for price to actually take out one of these two areas. Let's say it took out the lows, for example, right there. As soon as it takes out the lows, once Asian sessions lows actually gets taken out, what you need to do from here on out is look very, very carefully at the markets until it actually gives you a very good breakage of structure towards the upside, right? And as soon as we get this breakage of structure towards the upside, where it gives us a very, very clear market structure shift, what we need to do is just mark this out as our market structure shift / BOS, which means breakage of structure. And as soon as we do this, all we've got to do from here on out is just mark our fair value gap, right? And it usually does overlap with the actual market structure shift right there, right? And as soon as we actually do overlap the fair value gap, all we've got to do from here on out is enter our long position right there, right? There's so much that goes into the strategy, but these are the fundamentals that I'm teaching you. And if you do get the fundamentals, then you will be qualified enough to actually do get the strategy and completely smash it when you're trading. But if you don't have time trading, or you don't have time learning the strategy, or you can't learn the strategy for any reason, just join the first link in the description and we'll get you a payout straight away, okay? You don't have to pay anything up front. You only pay after we get you a payout. But anyway, all you've got to do is this, right? So make sure you actually do listen. You do have to wait for price to sweep out the lows first, wait for a market structure shift, and then you wait for the fair value gap. And that's all there is to the strategy, okay? So many people complicate it way too much. ICTs teach this strategy in hours of mentorships, but I teach it in literally 5 minutes, 10 minutes on YouTube, okay? And you're getting all of this value for free. So the least you can do is actually implement this and see it work for yourself, right? But I'm going to be showing you a better example in the next video. But that's going to be it for this video and this example, and I'll see you in the next one. Take care.